I want to talk about, say, the pros and cons of raising capital from a VC firm. What do you think would be the good and bad of?
I'll just tell you the pros and cons of what we thought, when we started out versus how we think about it today. I think a lot has changed in our thought process, so I'll just share that perspective. And obviously, I think, I'm giving you the founder perspective. A VC would have a very different perspective, and I think they would agree with, like, both sides would agree to most of this in terms of how we think about it, right? I mean, the obvious pro with a venture capital firm is the word capital, right? Because you're sort of raising money. So I think that's the biggest pro, if you ask me, in terms of what do VCs bring to the table. I think it's the capital, it's the money. It's really, really useful to a lot of first time founders, or where the business model is very capital intensive, right? So obviously that's the biggest pro. I think the second one of why we raised VC capital is this is how we thought about it back in 2011, getting into 2012, on what would be a pro for the VC capital money we raise is credibility. Like for us, we were a platform company, right? And a lot of businesses, for them to be able to build on top of us, they would want the platform to, or they would have wanted the platform to have credibility. And we were first time founders, right? We were not, second time, third time founder. We did not have our own pedigree in terms of having that credibility. So I think credibility is a great reason, and not just for customers, but also hiring, like for employees. When they see some VC has invested in the company, they see specific brands around that. That creates a lot of credibility, right? So I think credibility is the number two pro. And then usually, okay, all of us as founders, we think if we get one of these big names, I'm not going to name anyone, but if you get one of these big names, the pro is going to be they're going to give you a ton of advice, right? You'll have like great folks on your cap table or on your board if you have late stage fundraising. That you're going to get a lot of advice. I think advice is the least of the things from a pro, is what I've realized over time. I think network is more important. They can connect you with a lot of good folks in terms of folks they are aware of from a networking perspective. But advice is usually minimal because they have a lot of companies they've invested in, and usually they don't have so much time to spend with each company, at least at early stage, right? If you've in the late stage investment round, it's a different story, right? They may have more time to spend with you, but usually early stage is lesser. So those are the pros. On the cons, I would say in return for capital raise, right? Like you're giving up your equity. So I think I don't think this is really a con. It's just a question of being aware that you are diluting capital, or rather you're giving away equity. And if you're okay with that, that's totally fine. It's part of the equation where you take money in return for equity. So necessarily not a con, but something for everybody to be aware with. Because once you go that model, it's hard to sort of later on 5, 7, 10 years down the line rethink the whole plan, right? It's really hard to do that. So be aware that that's part of the play. It's part of the game, and you have to play that game once you get onto it. So that's the first piece of it. I think the second piece, again, it's not a con, but I think understanding this is especially important for first-time founders. It's important to understand how the VC model works, right? So when you get money and you're a first-time founder, you're all excited because you have a great logo on your fundraise round, and you have a great announcement coming on TechCrunch or somewhere else saying you've raised X million dollars of money. But understanding that VC's model is a specific model where they need to show return in the next 7 to 10 years, right? So for them, exit is really, really important. So I think making sure you understand that, right, and align with that. I think that's my third point as well. Like I think alignment is like super critical. So alignment both on the timeline, who are you getting on board, do they understand your story, right? Like all of that stuff. I think that's like super critical. And alignment could be a con if it goes wrong, right? Especially when you raise money and when you start raising more and more money. We've seen so many of these stories, right? In the Silicon Valley where it's publicly spoken about now. But I think those are the three areas, not necessarily cons, but if they go wrong, that could backfire. So I think the founders need to be mindful of it. And then I think, just thinking about as a first time founder, if you're starting a company, a lot of VCs would look at how large the market is. They would typically ask you that question, how large the market is, how large do you think you can get? So just thinking about whether the company you want to run and how you want to run it, is that all even aligned with the VC model of the 3 points I just spoke about?